Welcome back to the 11th season of Speidel's California Minute podcast. I'm your host, Catherine Zidane, the editorial director at Speidel, and this week we're covering California conformity to federal alimony treatment. Speidel's post-tax season update and review webinar covers answers to all the questions that come up during tax season, like Trump accounts, the new qualified tips and overtime deductions, California conformity to OBBBA provisions, and more. Get registered for one of 4 dates in May at Speidel.com under webinars. Due to changes made by SB 711, last year's conformity legislation, California will conform to the TCJA's federal treatment of alimony deductions beginning with the 2026 tax year, but generally only for divorce and separation agreements executed on or after December 31st, 2025. This means that for agreements executed after 2025, the payor cannot claim a deduction for alimony paid, and the recipient will not include alimony received in their taxable income. However, taxpayers can modify agreements executed prior to 2026 to make the alimony paid non-deductible and not includable in the recipient's taxable income by expressly incorporating the changes made by SB 711 into those agreements. Per the terms of SB 711, starting with the 2027 tax year, the statutes limiting California's conformity to the federal alimony treatment to only apply to divorce and separation agreements entered into after 2025 are repealed. This means that for post-2026 tax years, if the law as currently written remains in place, California will fully conform to federal treatment of alimony for payments made pursuant to divorce and separation agreements that were entered into after 2018, as well as pre-2018 agreements that are modified to incorporate that treatment. Remember that the TCJA only made alimony payments non-deductible and non-includable for post-2018 divorce and separation agreements and earlier agreements that were modified to incorporate that treatment. However, SB 1435 has been introduced by the Senate Revenue and Taxation Committee, which would retain current alimony law treatment in California. This would mean that California would only conform to the federal treatment for divorce and settlement agreements entered into after 2025, or earlier agreements that are modified to follow federal treatment. If SB 1435 passes, California would continue to allow alimony to be deducted for divorce or settlement agreements entered into after 2018 and before 2026. It's anticipated that this cleanup legislation will be enacted. SB 1435 also addresses cleanup conformity in a couple of other areas. A drafting error in SB 711 inadvertently conformed California personal income tax law to the IRC Section 163J business interest expense limitation. SB 1435 would correct this drafting error by stating that the Section 163J business interest expense limitation would not apply for personal income taxpayers on the California return. SB 711 specifically decoupled from the business interest expense limitation for corporation franchise and income taxpayers, so SB 1435 will only address the personal income tax provision. SB 1435 would also clarify that the investment income limitation for taxpayers claiming the Earned Income Tax Credit on the California return would remain at $3,400. California would not conform to the American Rescue Plan Act increase in the limitation to $10,000. Stay up to date with California tax legislation and other state tax changes with a subscription to Speidel's California Tax Letter, a monthly newsletter written by California tax pros for California tax pros. You can get details and download a sample issue at Speidel.com under Publications. That's all for this week. Join us next time for another episode of Speidel's California Minute.